Welcome back to the channel, the Daily Forex. So in today's video, I'm going to share with you guys how to trade the boom and crash market successfully and make profit from the market. Right now, when you're trading the boom and crash market, there's something you need to know about. All right, when you're trading the crash 1000 index market and the crash 500 index market, a spike is likely to come quickly on the crash 500 index than the crash 1000 index. Right now, for example, let's start with the crash 1000 index right now. All right, and this is the market as we can see right here. All right, and right here we have indicator set up, the MACD and the RSI indicator for this chart right now. Okay, now you can see that the spike came through here and the market bought up to about 10 candlesticks, then another spike and the market bought up to about 7 or 8 candlestick. Now if we go over to the crash 500 index market, the crash 500 index market, you can see right here that spike came through and there was 4 candlesticks. Immediately again another spike came through and you can see that the spike came through at this point again, meaning that when the market crash, it's likely to crash again, meaning that once the spike appear the first time, it's likely for another spike to come through again on that particular market, which is the crash 500 index market, just as you are seeing here. So it's likely for a spike to happen immediately after 2 or 3 candlesticks on the crash 500 index. So that's why it's best to scalp the market on crash 500 and boom 500 index. Then when you want to catch your spikes, you can catch your spike perfectly on the 500 market, like the boom 500 index and the crash 500 index market. Right, so we're trading on the crash 1000 for this trading session. So now I'm going to show you up the strategy. I'm going to show you the indicators, which is the RSI and the MACD indicators. These are pretty simple indicators for you to trade this market successfully and be able to make profit. Right now, we'll start up with the RSI. We're going to put it on period 13 right here, where I apply to close. Then the level is going to be on 90 and 10. On the level of 90 you put sell, and on the level of 10 you put buy. Then you put the style right here, it's going to be on 3 pixels. Then you click on done right here. Then the style right here, you put it on 3 pixel, and the color you use the blue color or any color of your choice, as long as you know the indicator setup which you are using. Right, then you click on done right here, just as you can see. Right, remember we use period 13, not period 12 on the RSI. All right, then for the MACD, you put on the fast EMA on 14, then the slow EMA you put it on 24, while the MACD SMA you leave it on 10. All right, then you put on the main signal, the main right here, you put on the color on black while you use 3 pixels. The signal is going to be on 3 pixel as well. Then you use the red color right here, just as you can see. Then the straight line pattern as well. Then you click on done. All right, now this is the indicator setup which we are using for this strategy, and you can see how accurate it is. All right, you can see how accurate strategy is. Now if you zoom in real quick right here, just so I can show you what I'm talking about. Now you can see that when this MACD right here, which is this blue line, all right, this blue line is the RSI. You can see that when it cross above the MACD right here, above this level at the overbought level, when it touched the level of 90, it took about 4 candlesticks before the spike came in. So if you are a spike catcher and you want to catch a spike, all you need to do is just wait for this particular opportunity for this blue line to touch this level of 90, or you can wait until the MACD, which is this black line, touch the level of 90. It's going to give you a signal, which is a signal for a sell position. Right, then when it touched this level of 10, that's another opportunity for a buy. At this point, take a look at it. At this point, right, when price gets to this point, you take a sell. All right, perfect strategy, perfect opportunity for you to catch spikes and buy the market. All right, then when you see a good opportunity like this on crash 1000 index, this is a good opportunity for you to catch the spikes. Whenever the MACD is on a downtrend, it's a good opportunity for you to catch your spikes. What you can do is just predict the market. You can only do this if you have a bigger account. All right, you place a sell, all right, then you can expect the market to sell and you catch your spikes. if you have a bigger account. But if you have a small account, do not do this because you're going to blow up your account. So if you have a bigger account, you can place a sell entry during the downtrend of the MACD just to get a good opportunity to catch the spikes. All right, now this is, you are predicting the market. All right, the MACD is not going to give you a particular signal that the market is going to spike after 4 or 5 candle ticks, right? Meaning this downtrend of the MACD spike always come true. So for what you need to do, if you have a bigger account, all you need to do when you see a downtrend of the MACD, just place a sell. All right, and the spike is going to come in and you make profit, although you're going to make some losses on your account because the market is going to be buying for a particular period of time because before the spikes will come in, right? Just as you see right here, the spikes came downwards from this point right here, from this point downwards to this point, and you can see that the spike came through into the market. All right, so it's a good opportunity for you to trade the market. And when you're trading the crash of bull market, always back test this market, always check on the historical trend so that you'll be able to predict the future market successfully, right? So that you'll be able to predict the future market successfully. Check how the market have been on your previous trade so that you'll be able to trade the future or the present trade. Right now, let's check on the boom 1000 index market. All right, the boom 1000 index market, perfect right here. We're using the same setup and the same parameters for the boom 1000 index, just as we are seeing right here. For the boom 1000, when price gets to this point, the market is going to sell. All right, when price gets to this point, the market is going to sell, and when price gets to this point, the market is going to buy. So you see how it's accurate. This is the sell, this is the buy. So we're not changing any description for this. Remember, I told you how you can use this sell entry, this sell description we added on the RSI, and this buy, I told you how you can use it on the crash 1000. And right now on the boom 1000, when price gets to this point, you place a sell, the market is going to sell, just as you're seeing right here. And when price gets to the level of 10, the market is going to buy, just as you're seeing right here. The spike came through into the market. So if you want to be safe in your trading, and if you have a smaller account, all you need to do is just wait for these two perfect opportunities when price gets to the overbought and when price gets to the oversold. All right, and even though and if you are not using this indicator setup, you won't be able to see these levels well. All right, now if I remove the setup right now right here, so that you can see, now you can see that if you zoom out right here, what you think that this is the oversold and this is the overbought, right? This is oversold and this is the overbought. But when you use the indicators right here, you're able to see that price has gotten to the level of 10. All right, price has gotten to the level of 10, so we're expecting a buy on the boom. All right, we're expecting a buy on the boom market. That's what we're seeing right here. But here you can't see the levels on the market. All right, you can see the levels on the market. So imagine that price is at this point right here. What you'll be thinking is that this market is going to buy, but however, the market will continue to sell until it gets to that level of 10. Just as you can see, there is a buy. So imagine if you're in the market right here and you zoom in a little bit, let's say at this point, and you think that this market right here is at the oversold, you think that the market is going to sell. But if you check on the MACD, you see that the market have not gotten to the oversold level. All right, and when the market gets to the oversold level, which is level of 10, the market bought after 4 candle ticks, just as you can see right here, right? So I believe after watching this video, you found value and you understand what I just shared to you guys. All right, now boom 500 and crash 500 index, the spikes always come through in the markets. It always come often, quickly, more than the boom 1000 and the crash 1000 index market. So if you want to scalp this market, always trade on the crash 1000 and the boom 1000 index so that you can scalp the market. When you're scalping the market, you are taking when the market is buying on the crash 1000 and when the market is selling on the boom 1000, that's when you are scalping, taking advantages of those price movements. You are not cashing the spikes. You're not cashing the spikes. All right, you're not cashing the spikes. You're just scalping the market, taking just those small profits from this market, and you exit immediately after you have gotten the profit and you wait for another perfect opportunity. All right, so if you find value in this video that I've just shared with you guys, do it to like and subscribe to the channel, the Daily Forex, for more awesome trading tips and strategies. I will see you guys on the next video.